Inflation was pretty much on all of the central bankers' minds, but also the finance ministers. We have, very elevated inflation levels in many advanced economies and also emerging markets. We heard a few days ago in the UK it's 9%, for instance, which is the highest level in 40 years. Many countries we haven't seen inflation that high in 30 years or more. So clearly this is something that policymakers are worried about, and they want to understand what's going to be happening in terms of the inflation process going forward. So there were a lot of discussions about that.
And what was like the major lesson learned from these discussions? Are we seeing peak inflation, or is that going to get worse?
Well, there are expectations that inflation may peak pretty soon in a number of countries. Some of the disruptions related to supply chains, for instance, there is maybe some hope that this will ease in coming months. So that would sort of release some of the price pressures. At the same time, there are a number of risks. We see the lockdowns in China that are being extended that could lead to further disruptions. We see the situation in Europe and the war in Ukraine with potential increases in energy prices and maybe food prices that's going to trickle down in terms of headline inflation. So we are expecting inflation to moderate in the second half of the year and then in 2023, but we could have bad surprises.
What does it mean for the economic growth outlook? Because clearly more and more market participants are embracing the concept of stagflation for this year, not only for Europe, but also for the United States.
Well, stagflation is a reference to what happened in the 70s, and we believe at the IMF, we believe that we are in a somewhat different environment right now. So if you think about the growth rates, for instance, the global growth rate, we are predicting about 3.6% for 2022. It's a significant downgrade compared to what we were expecting only 4 or 5 months ago. But 3.6% is a solid number. It's sort of the average growth rate the global economy had between 2011 and 2019. So our view is that we're not close to a global recession. Individual countries could have different outcomes, but we're not close to a global recession. But we have this softening of growth and this increase in inflation, and of course that's a worry. And directly increase in prices, that's reducing households' purchasing power, it's reducing their income, how much they can put on the table, and so clearly that's having an impact on aggregate demand.
Yeah, if you talk average, it's always a bit, it could be misleading because the dispersion could be very wide, right? So when we talk about the major economies like the United States or Europe, what are you expecting for them?
Well, for the US, we're thinking also that there's going to be a slowdown, quite significant. It's related in part to the increase in inflation and also to the response of the Federal Reserve that is tightening monetary policy, and we expect they will continue. And that will also cool off the economy and try to bring down these price pressures. So we're anticipating a slowdown there. In the European economies, we have a somewhat similar trajectory. The European Central Bank has not yet started to tighten, but they've announced that they will start possibly over the summer in July. The UK has already started. So we have different trajectories, but all going in the same direction. Central banks are getting, on the action. They are tightening monetary policy. They want to get a hold of what's happening with inflation.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.